So, we had a pretty solid performance in 2024, but 2025 will be a very challenging year for the industry as a whole and also for Volvo Cars. The global car industry faces multiple uncertainties. The automotive industry is a cyclical industry, and we are currently experiencing a cyclical downturn, and this is expected to have weak demand due to the continued macroeconomic challenges that we face. We're also seeing a major structural reorientation of China with a very competitive car industry, as many domestic brands increase their market share at the expense of some of the global brands. And this dynamic of hyper-competition in China will continue to play out globally as well. Geopolitical headwinds are expected to further create uncertainties for the industry in 2025. Trade tariffs, regulatory headwinds, and reduced incentives are all likely to weigh in on both demand and the conditions under which companies need to operate. At the same time, when demand remains soft, there's also a transformational challenge that the industry has to contend with. The investments in BV and also the transition to a software-related vehicle for many of the OEMs. Now, we're ahead of our competitors when it comes to harnessing relevant technology for the future, and our progress on BEV is well known. And this positions us well for the future. Nevertheless, 2025 will be a challenging year. But we're coming into 2025 with good momentum. In terms of sales, we've delivered 2 consecutive years of all-time high sales volume, aided by strong performance of our balanced lineup of cars, as well as a strong order book. We've also continued to improve our gross margin year over year. On profitability, we've delivered 2 record years of absolute core profits, despite the rapidly weakening demand across the market. And this performance demonstrates that we're steering the company with diligence and with firm hands in a very uncertain environment, and that our core operational structure of the business is continuing to improve. So looking ahead, 2025 will be a challenging year, and it will be a transitional year for us towards our long-term ambitions. We do not expect the market to grow at the rate of previous years, coupled with high likelihood of higher discounts across the industry due to increased competition. As a result, it will be challenging to reach the volumes and the profitability levels that we achieved in 2024. In addition, we also see the effects of profitability from higher amortization as we continue to ramp up our new models and technology. But we will continue to increase our focus on cash preservation. And now we anticipate that we can deliver a positive free cash flow for the full year of 25 compared to our previous guidance of cash flow neutral. However, any of this will be affected by additional tariffs and will add additional challenges as we look to the year ahead. So given all of this, the focus in 2025 will be on execution. So let me give you an execution roadmap for Volvo Cars for the year ahead. In terms of profits, we will launch 5 new or refreshed products to strengthen our balanced portfolio. We will expand our EX30 lineup with a cross-country variant. We're gearing up to launch the fully electric ES90, and this will be one of our flagship models, and I once again will demonstrate Volvo Cars' technology capabilities. We'll introduce a new long-range PHEV dedicated for the China market. And at the same time, we'll also continue to update our existing lineup of cars with meaningful upgrades. And we'll do this for 2 additional cars in the lineup this year. In terms of technology, the ES90 will be our second car built on our Superset tech stack. And this car will further establish Volvo's position and our reputation as the only legacy OEM to offer multiple products with core compute technology. Our Chief Engineer and Technology Officer, Anders Bell, will join us shortly to talk more about this. In 2025, around 2.5 million Volvo customers around the world will receive a free over-the-air update to our next generation user experience on cars built as early as 2020. We'll also start producing the EX30 at our Ghent factory in Belgium for the first half of this year, and we'll reach full production by the second half. This will reduce costs, and it will help maintain our competitive position in this core space within the industry. At the same time, we're ramping up the production of our EX90 at our Charleston facility, and we'll also start the production of that car in our Chengdu facility in China. The same goes for our new XC90, where the first customers are already behind the wheel. As I said earlier, The whole automotive industry will be severely tested this year. But we, Volvo Cars, we must keep our eyes firmly on the road ahead and not sacrifice the future on the altar of the present. Therefore, we will continue to work at speed towards our SPA 3 launch, which will unlock further cost efficiencies and improve performance. And I'm happy to share that we have already built and driven the first car of the EX60 on SPA 3, and we'll be gearing up to bring this to the world in 2026. We've made great progress on this car, and Anders will speak more about this and why this will be a game changer for Volvo. Finally, we're also doubling down on our internal cost actions, with efficiency continued from our efforts in 2024, and we'll continue that through 25 and beyond. While we are sharpening our execution engine, we will soon come off of our peak investment cycle. Remember, these key investments have gone into new technology to manufacturing, as well as the technology and the platforms for the cars for the years ahead. Some of these cars are already now on the road, and there'll be more to come in 25 and 26. And this means that by the end of 25, we'll have already laid the foundations for profitable growth without the need to maintain the pace of investments of the past. And this is why, from 26 onwards, these high levels will significantly reduce, both in terms of absolute investments in CapEx and engineering, and even more so related to our revenues as we grow the company. We have done so much of the hard work that allows us to reap these benefits. And yes, there is some heavy lifting that remains ahead, but we're aware of these challenges. The depth and the variety of our balanced product portfolio is one of our greatest assets in today's turbulent world. We will expand our lineup of fully electric, plug-in hybrids and mild hybrid cars, and continue to offer world-class products in all segments: SUVs, sedans, wagons, in terms of size 30, 40, 60, 90. And we'll do this in over 80 countries around the world. The global car industry is going through fundamental change, and it stands on the precipice of this profound future. 2025 is a very challenging year, but as I said, we will never sacrifice the future on the altar of the present. So while we navigate the challenges and unpredictability of the environment today, we will continue to invest in tomorrow. We have all the tools to strike the right balance between our long-term strategic goals and our short-term tactical adjustments, and we are determined to emerge as winners in next-generation mobility. This is what gives us the confidence in our ability to meet our ambitions as outlined in our Capital Markets Day last September. Outgrow the premium car market on a CAGR basis from 2023 to 2026, with 7 to 8% core EBIT margins in 2026, and generate strong free cash flows from 26 onwards.